Hey everyone, I am Josh Rager here with another video from BlockRoots. As always, thanks for being here. If you have not yet liked or subscribed the channel, make sure to do that below. You can go ahead and you can subscribe. And as far as subscribing, if you do comment and leave some engagement below, we will actually put you in a drawing giveaway for $100 of Bitcoin. We stopped doing that for a little bit just with all the holidays and all the busyness in life. I know Ryan has also stepped up and done a lot of videos lately too, just explaining a lot of things. Even in the last video, he talked about an awesome tool called Cignals that you can use from orderflow. We can certainly talk about that. I can leave the link below that as well. But let's go ahead and give away $100 of Bitcoin again. So go ahead and leave those comments below. Don't forget to subscribe. So let's go ahead, and as always too, nothing is financial advice. Do your own research. And I want to talk about a few things today, specifically the CME gap that we talked about, the current range that Bitcoin is in, the balance at the macro, point of control. We can talk about that. As you know, we finally had a bounce, right? Bitcoin has been in a downtrend ever since, let's see here, the top of this was November, right? So we've been in a downtrend for a month now, and so it's good that Bitcoin finally bounced after this downtrend and sideways movement that it's been going through. But if we do zoom out, as always, and we'll look at this later on, you can see that we're in a continual downtrend. We're hitting lower lows and lower highs. So the trend is still down, as bullish, as we want to get. You can't necessarily get bullish right now for the fact that we're in a downtrend, and it's very obvious. But the good news is that price did bounce. It moved up around 15%, dropped immediately about 5%, and we've been going sideways ever since, which, as you know, as we start to compress here, that's going to lead to some volatility. And so there's a couple of different directions we can go up or down. We can talk about that shortly. What did happen was that the CME Futures gap did close. Again, if you're new to this, if you're new to gaps in markets, basically when a market closes, now the Bitcoin market is 24/7, it never closes, but the CME Futures, as far as the trading for that, it does close on the weekends, and so that does close. And so we had a gap where there was nothing traded right here, and we tend to see the price tends to go back and explore or fill that gap, and then from there it moves on. And so we see that quite a bit, probably at least 90% of the time in the Bitcoin chart. It doesn't need to actually go back and explore that gap or fill that gap, but we see that typically gaps, even though it's somewhat of a meme because Bitcoin is a 24-hour market, it's a self-fulfilling prophecy, because what happens is that you may get some buyers or sellers that push the price to that area. And of course, once it hits that area, as you see on the CME Bitcoin futures chart right here, you're gonna notice that the wick right here above it, that's because you saw people taking profit. And so people were selling at that point. And so you tend to see a rejection or a bounce typically at the end of the gap, and then either sideways or reversal movement. So again, self-fulfilling prophecy, but at this point in time, it's worked pretty well. And so it'll continue to be a conversation in the future that you're going to see all over the place with social media, YouTube, as well as crypto, Twitter. So CME, we're currently going sideways. The market is closed again. So what's going to happen, and we'll talk here in a minute about that. We can go up or down, of course, obviously. What's an argument for either way, right? Either direction. Now, the current ranging right now, as you can see, price is, it's about a $200 range, right? Around 7,000 to 7,200. That's kind of been the peak areas where Bitcoin has hit at. And then we've seen some, not really necessarily sell-offs, but price, of course, dipped from there. Fundamentally, what's been going on? And so you've seen a couple of different things fundamentally. One thing is that we've seen, and so as you know about Tether, the stable coin, anytime that Tether is printed, we see that the price tends to go up or hold steady with Bitcoin. And so I think there was at least 30 to 40 million worth of Tether printed today. Typically that would be bullish in the past, but what I have to say about that, and I think Cantor and Clark agrees with me, is that you can't really necessarily rely on that, right? That's because Tether is no longer the dominant stablecoin, even though it may take up a lot of the market space with stablecoins. We're seeing more and more stablecoins come out, and more are going to continue to come out every month and every year. And so a lot of that market is going to be taken up by other stable coins, and so Tether isn't necessarily going to be able to dominate like it once did. And so in the past, sure, price may have stabilized or went up when it comes to Tether, but we've seen that that's become less and less fundamentally as time goes. So I'm not really bullish just because Tether was printed. I wouldn't think that you would be either. Another thing that we've seen that multi-million, at least I think 10 million worth of longs have been closed multiple times. You can see that actually. I know this is maybe confusing to a lot of people, but as with the price with Bitcoin as it ranges, we've seen that open interests went down, and kind of reflecting then price as well. And typically what that is again, the amount of people open interest interested in the market at the time. So again, long, shorts when it comes to derivatives with BitMEX. We've seen at least 10 million worth close multiple times. So again, price seems to be stabilizing in this area. Now, as far as some other things to take a look at, Cantor and Clark here at BlockRoots also discussed when it comes to order flow and using these footprint charts. We can take a look at what he's talking about. And again, another reason to kind of be wary as far as price moving up in this level, that's because we've seen that on this chart pattern, that the red line there is the point of control for that candle. Okay, point of control again is the price where the most volume has been traded. Okay, and so that can tend to act as support or resistance when it comes to price action. And we've also seen the top of the value range area comes to the top of these range to these value areas. They also tend to act as support and resistance a lot, meaning that most of the volume has been at this level around 7350 or 7400 and below, and it's held there. And so very likely that we see that as well, that price can move up, kind of knock off that, continue to move on down. And so that's something. Are we seeing absorption? And again, absorption meaning that the bigger hand, those whales, as we say in crypto, are actually absorbing the buy orders. Of course, they limit sell, and so you don't see their limit sells. We don't see those ask on the order book immediately. So again, when you do, it tends to be spoofing. A lot of times that's just to scare people, so price moves back down so they can fill their longs and push the price right back up. And so just the large sell that they put in place when actually they do want price to go up, they just want to get filled lower. So that tends to happen. But with this looking at this range, we can possibly see some absorption in this area. Again, with the downtrend as well, and Bitcoin has looked weak outside the strong bounce from 6,400 region, still in downtrend. So that's just something to take a look at, just thinking about absorption. If you are interested in learning about order flow, right, these are things, this is looking within the candles. This is more than just drawing on charts, right? You're not going to really find this anywhere else. There are specific tools that you can use, like Cignals. We talked about Cignals in the last video. I'll drop the link to that below. Would love to have you check that out if you want to look at order flow and using that as a tool. But also too, where you're going to find this information is our order flow series within BlockRoots. It's highly affordable as far as the members. We have under 200 members, and so far they've been completely happy as far as learning. Got here the order flow series where you're going to be able to learn, where in my opinion, I haven't seen this anywhere else. And you can learn about auction market theory, order flow, delta, premium discount, some of these word footprint charts specifically, and how to use those as a tool to get an edge on the market with your trading. Again, it's really valuable and important. So if you haven't checked that out, check us out, BlockRoots. We're really cool. We don't hold you to we don't hold your credit card hostage by any means. You can cancel anytime you want. We'd love to have you around, but if it's not for you, decide it's not for you, that's totally fine. We're here to support you. We're here to educate and to help and to really support the community, unlike many other people out there who have taken advantage of people. So we don't want to do that. We want to help. So order flow series, BlockRoots, check out the link below as well. I'll throw that on there. So let's keep going here, because really the question, right, is what's next. So what's next can be up or down, as we know. It's quite obvious. And so the Bitcoin futures market is closed for the weekend, so know that whichever way that we move, it's very likely that we could eventually move back and reverse in an area to, quote, fill that gap, right? We'll see. One thing that I'm looking at is if I actually go up to the high time frames, again, we are in a trend, we're in a downtrend, and if you want to use the trend line, which a lot of people like to use, right? This is not perfect whatsoever. Let me go ahead and make it like that. We can see possibly, as far as price is held below this, of course, a wick up, but that would mean that price would move up to around 8,200. Again, in this cluster area right here, could possibly move up there, hit off there, and move back down. That's one possibility for sure. But one place that I'm specifically looking at, of course, is the area that flipped from support to now resistance, right? And so that is this area, which is, you know, close to 7,700, 7,800. Of course, the local high that we've seen in this current range was around 7,800. Okay, and so if price can't flip up above this area again, this quote resistance, right, then we're going to see price likely continue on down. So we could even see price come up and retest the local highs up here around 7,800 and then move its way back down. A lot of times too, the price could sweep up. A lot of people's stops could be there and then move back down from there. So for a stop hunt, we could certainly see that as well. But if it does move up, again, really what's going to happen is likely that you're going to leave a gap right there, and it's going to just move back down and fill the gap in this downtrend. And so that's one thing that we can definitely take a look at. But if you want to put it on the weekly chart, right, go ahead and mark this level. You're going to notice it's clear and obvious that this has been support, and now it's flipped to resistance, especially on the higher time frames, such as the weekly. So you definitely want to flip that area. You want to be above 7,700, 7,800 for sure. It would be even better if we could break above 8,000, but not for sure if we're going to get up that high before I move back down. But I'm not going to be bullish until we show that. So if we do move up to 8Ks, don't be fooled by that. Stay on alert, because you never know what's going to happen. We're still on a downtrend, and so that would continue to work with that timeline or that trend line. Okay, so how low can we go? What if we break down? Well, as far as that goes, we can certainly look at a couple of different things. Again, one thing that I like to look at here, get rid of some of these other trend lines, is I like to look at the macro point of control. And what you can do is, if you want to do that, you can actually click fixed range. Go ahead and type that in, and in indicators, click on that. And then what you're going to do is to be able to move it in the range that you want to take a look at. And it's going to show you right there. This is the dark line, is the point of control. And so that means the price where the most volume was traded. Now, naturally, you would think that the bigger hands and big traders are going to buy support at that level. And that's what just happened. We saw that price bounce before we get to that level, and we saw that price barely maybe whipped through a little bit, and it bounced again. And so this is certainly obviously the area that we want to take a look at when it comes to the point of control. That's where we want to look at as far as a heavy support. Not only that, but Kenner and Clark also in a previous video talked about how, you know, you look at a market structure and it is clear and obvious to any trader outside the cryptocurrency market that this area is support. You can look at the market structure. This area held, then it flipped under, then it's held again, and it continues to hold right now. So obviously, if you're from the outside looking in, you see that Bitcoin is an asset that has a lot of promise to it, and you want to buy in a little bit. Where are you going to buy it? Well, it's very likely that you want to buy in this area around the low 6,000s, right? Now, price can certainly dip below this. If it dips below this, I'm still not necessarily bearish yet. I'm not going to really be bearish until price tips below under the 5Ks. And if you look at the long-term chart here, I've marked some things out. We'll go ahead and a naked view of this. Really what we've seen, this orange line is the 200 moving average on the weekly. It's held as support a couple of times with the macro trend here, right? Back in 2015, it did wick below it. Price did kind of close on it, but it did not really close far below it. And then again, we saw that this same area held around 3,100. So this is a specific area to take a look at. You can see that price has made its way up. The moving average has made its way up over time to around 5,000. And if you look again, what you're going to see is this block area. I've also got this trend line on here. Again, trend lines are meant to be broken. I don't necessarily love to trade on trend lines. If I was a whale, I would definitely break a trend line to freak people out, right? So again, that's not the be all of support. I think more or less where we see buyers step in at. I don't think buyers are going to step in here because of the trend line. Buyers are more likely to step in there for the confluence of the POC, the point of control of the macro, and this structure right here. But below that, if it does break below that, I'm very confident in at least my own knowledge that it's going to probably hold in this area, this block, this price area right here around the mid to low 5,000s. That's because on the weekly, nice little level to watch there, as well as the 200 moving average moving up as well. And so you've got confluence there, and I think as long as it holds there, you can certainly be somewhat optimistic, right? If it does break below that, then likely that we could even hit below 3,000 for all I know. I don't think it's going to do that because, again, why would it go up 300% to go back down to where it was at and below? It just doesn't make sense, especially with the halving, the increase in scarcity as far as the block reward coming up likely in May of 2020. So just understand that. So I'm excited about this. I'm excited about us being at a potential bottom area for the fact of the structure, the POC, the trend line, 200 MAs moving up. Could we dip below and continue to break down? Yes, certainly could, but you're going to see a lot of high volume buys at the low to mid 5,000s. Also know that the story of Bitcoin when it comes to buying and selling has been front running by big players. So just be aware that there could be some potential big players who step in above this 5,000 area, maybe high 5,000s. They want to buy at 5,800 and they push the price up, and from there, kind of like the previous move, we just saw FOMO from big players continue just to push the price up. And so I am certainly bullish on this long term as you look at the logarithmic chart. And really just to overview again, we see that we're still in a downtrend, right? So overall, we continue to work our way down, lower lows, lower highs. The good news is that we've had a bounce, but maybe some absorption here, some weakness here. Until we break above 7,800 and hold that this area again that I marked, I'm not going to get too bullish. I think that we can even get as high as 8,200 or low 8,000s and move back down. And so until it shows the trend change and the volume to come with it, I'm not going to necessarily get too bullish yet. So with that said, please like the video if you like this content. Subscribe to the channel. Would love to have you. Make sure that you engage and leave a comment. And we look forward to seeing you over at BlockRoots, learning some order flow. If you have any questions, feel free to leave those below. Talk to us on Twitter. For Karen Clark and myself, I'm Josh Rager. This has been BlockRoots. You guys continue to trade effectively and have a great start to your weekend.